Morning, students.
Good morning, sir.
Is my voice is clear for you?
No, sir. It is breaking.
It's breaking.
Yes.
Now,
Now, okay, sir.
so in the previous class, we discussed about introduction part, the managerial person, that the mainly the chief executive officer in and this role and responsibilities of key managerial persons. And some of you told that, sir, that you're too fast, that we are not understanding. So let's I will revise with this slides of introduction part and the key managerial person. What are their roles and responsibilities? See, as you know that in the first chapter it is an introduction, and also the second chapter is formation of company. So in the introduction chapter that we already learned the various kinds of companies. What do you mean by the company? Everything. In second chapter we learned about a formation, that the various stages of formation, at the five stages what we have discussed. Promotion stage are in selecting the name of the company, are in subscription, and also the incorporation, and also the commencement of the business. So that's what we discussed, and also the regards with the debentures and different types of shares, and also the prospects. What are the contents of prospect? So these all we discussed in a unit 2. So in the next week that we are going to, that I'm going to revise with this unit 1 and unit 2, because on 10th onwards you have an internals. So on 30th we are going to discuss chapter 1 and chapter 2, important questions for the internal examination. You have an internal examination for 35 marks, section A, section B, and section C. Section A is in 2 marks questions, section B is in 5 marks, and section C you will be having on 1 question. Okay, so let's move the unit 3, company administration. Whatever we discuss in an unit 1 and sorry, yes, tell me. I'm not audible.
Sir, you are audible.
Your voice is breaking.
Sir, notes, sir, for 2 lessons, sir. First 2 units, sir.
You want the notes, or it's points is enough for you, no? Is that is notes is required for you?
Sir, you give that PPT, sir.
PPT is already posted in this LMS, right?
Okay, sir.
Yeah.
That's better, sir.
Is there how many of you? All of you attended all my classes, or like, is there anybody who attended recently, who joined recently?
Yes, sir. Yes, sir. I am, sir.
Who? Shweta.
Sure. Yes, sir.
Yeah, Shweta, no issues. See, I know that that you attended recently, whatever you joined recently. I will revise with the first unit and second unit, and I will give you the PPT. So it is already there in a this great learning software. You can go through that PPT. Okay, everything is there. Point. If you are not getting any things, if you are not getting any explanation, please let me know, and I will just upload some important explanation of that particular whatever the points you require. Okay.
Yes, sir.
So, introduction part in company administration. As we discussed in the first chapter and second chapter, it is an external things. How different companies are there, and how the companies is going to exist, and how they are going to promote that. Everything we learned in that. It is an external part. So company administration totally related to after the commencement stages of the business. So who are the main administrator? In partnership, it was like partners are the administrator. So, but in a company, it's not like that. So shareholders are the investors, administrator are the like employees of that particular company. So like that, we can call it as a directors or a managing directors or a chairman or a president, board of directors. So the secretary, that is a company secretary, and also the manager. So in order, because of an company is a legal entity and it is an separated from the members. So in order to carry out the internal affairs of the company and also the functions of the company, so some of the key managerial is required. If not, it is very difficult because we can't involve the shareholders to the company administration. Just they are an investor. So that's why we required an qualified and those who are eligible for to carry these functions of the company. So that's we call it as a key managerial personnel. Okay. Who are those key managerial person? CEO, CFO, manager, all departmental managers, and the company secretaries. CEO is a chief executive officer, and CFO is a chief financial officer who is taking care of the managing part and implementation of rules and policies, functions, and frameworks of the company. Okay. So, what are their responsibilities? Officer is default. Whomsoever we are appointing, whomsoever proposing, for example, board of director is proposing any one person for an CEO. He is an default of that officer. He is an called as default officer of the company management. So involves in all the activities of internals and externals, involves in all the functions of the stakeholders, who is taking care of the company's laws and administration. The key managerial person can sign the document or proceeding. As you can see, if any institution is taken care by the is a president, as you can take in an colleges, it will be responsible for the principal. Principal is taking care of all these things. Same in an organization, as in CEO or the CFO is the responsible for signing for the any documents which related to auditing or any other documents or memorandum of association or articles of association. If you want to submit any other files, so it is signed by the key managerial person. So annual return. What is the company annual return? If you want to know that, every year you have to create a company annual balance sheets and profit and loss account. So there you will get differentiate between of from past 5 years. You will do an analysis and you will do an chart or a bar graph or a pie chart or an analysis or an in showing the status how whether it is an return you are getting or it is a loss for the company. Everything you are going to get in an annual return. In that, it's like a same like as an entire of company details. Who is an CFO and CEO? What are their rules and vision and mission? Everything they are going to mention in an annual return. It is like a book. They are showing all the 5 years balance sheets and also the company returns who are the board of directors, share subscription, everything they are going to show in an annual return. Disclosure with regard to the transaction with the company. Company is a separate legal entity, so you should be more transparent. It's not like that you can't say that I will not disclose the information. You have to disclose the information to the public. Public includes the people, the shareholders, and also the government, because you have to pay the taxes for the government and you also pay the dividend for the shareholders. That's why you have to disclose what is a transaction with regards to the purchase and sales invoices, employees, what how much that remuneration that you have paid. Okay, everything you have to disclose with the public. Appointment of the auditor. So appointment of the internal auditor and the external auditor, which is appointed by the company's register. Internal auditor is the person who is an employee or a contractor. who is already completed the chartered accountant. So he has been appointed as an auditor. So he's taking care of the company's entire transaction details, and also he's attending the general meetings, and he can go for an investigation with the employees whether they are paying an remuneration properly or not. This is how the board of directors is going to appoint that particular auditor, or an CEO is going to appoint a particular internal auditor, not an external auditor. Okay, the auditor must not be having any shares in a company. He should be an outsider, like he can act as an employee or a contractor. Register of KM, key manager person and their shareholdings. Register of the company or a key manager of the person having what are their shareholdings, what is the what how much of shares they have subscribed in a company. These are all very important of a key manager person. For example, if you're an CEO, so board of director they are going to propose you as an CEO. What is the shareholdings in the company? You have a 20%, 30%, or 40%. There's these all things they are going to mention in this, all in an annual return and also in the company details. Meeting with the audit committee. In an organization, there are various committees. They're performing their task. So audit committees are one of the part of the company. They are conducting like quarterly or off yearly, so that they're going to rectify the any wrong statements or anything which is false which is there in a balance sheet and in any company details or a transaction. So they are going to rectify that, and they are going to what is there if it is wrong or right. So if it is wrong, they are going to cross verify the things and they will finish off it. Okay, this is the meetings which is conducted with an audit committee. Remuneration committee, this was headed by the CFO, that is a chief financial officer, who is taking care of the remuneration committee. In this committee, they're going to decide the what is the remuneration structure of the company norms, how much they're like in a public sector. You already know it's an fixed based on the pay scale of the state and the pay scale of the central government. They are going to pay for their employees. But in
Sir,
private
what
sector,
is the meaning of remuneration, sir?
remuneration is nothing but the salary.
Yes, sir.
Salary, what they are paying. Remuneration committee is then group of people who are going to fix the salary. Okay, as in a public company, it's like government is going to decide, but in a private company, they can give how much they want based on because it is a private owned by company. So they can decide as per the like as per the like skilled, semi skilled or an unskilled labor. So likewise, they are going to pay grade A, grade B, grade C. As you can see, CEO of different topmost companies, they are going to pay 500, 600, 800 crores with and also with the shares also. So see, key managerial persons are not supposed to trade inside, like with regards to the share security, they can't do inside the company. It's not. It's an illegal. It's an opposite to the Companies Act. So they are prohibited the company, because if they are doing in the sense, it will be a loss for the investors. Okay, that is they are taking an illegally. So they can't do that, as we discuss in a disclosure with a regard to transaction. So they have to disclose that. So when at the time of disclosing, it will be like a big burden for them and also risk for them. So that's why it's prohibited from the insider security or forward dealings in securities of the company. At the board of directors, they are conducting the general meetings. So how much shares they are going to subscribe, and also the what is the allotment of the shares of the particular year. Is they allotting the new shares, are they are selling the, like they are buybacking the shares, everything they are going to forward dealings with the general meeting. This general meeting mainly taken care by the board of directors. As I know told you, board of director are the representatives of the shareholders, not the representatives of the key managerial person. These are the main three important people who play a vital role in a company administration. That is the managing director, chief executive officer, and the manager. Okay, chief financial officer is the main important. As we know that the managing director or chief executive officer, manager, it's like you have to understand what is the role of them. Okay, managing director is a person, is a key managerial person who involves in a company affairs. Okay, who's taking care of the decisions with regards to the company. That's it. If they ask who is a managing director, you just answer this like he's a person who is eligible as the managing director and the chief executive officer, but the levels is changes. Okay, managing director and the chief executive officer. Chief executive officer is in a first position, and the managing director, and next will be the manager. Manager, you can say we can take also as a departmental manager or a deputy manager. We have in a company we have various departments. As you know that marketing, HR, or in production, R&D, sales. So these all the department we have various managers. So these all manager very much important, which comes in an uh, top level or middle level management. So they are working together in order for the smooth functioning of the organization. So the main thing you have to learn here, though, who is the chief financial officer? What is the role of the chief financial officer here? So I think this will be the important for 6 months. So he's a senior manager who is responsible because, and also they can elect as an auditor. Okay, he has to withdraw the audit practice, and he can become as a chief financial officer. Because why they are selecting a chief financial officer, he has an enough knowledge about the financial transaction and what are the details they have to submit to the out external person of auditor. That's why they are appointing the senior manager of the responsible for overseeing the financial activities of an entire company. What are the financial activities which required? So the entire companies depend on the finance only. Without money we can't run the business. Every each and every day we have to invest certain sum of money, or an working capital is involved. So that's why for all he has to overseeing all the financial activities. So for whom he is going to report, for the president is going to report. So the company's capital, what is the capital structure, how much of we invested, and 10 crores or in 20 crores, 50 crores, that he has to take it. What is the investment and what are the avenue of sources? Okay, that is going to create an like doing budget. So what are the budget? In a budget there is going to mention what where we are going to invest and what are the incomes in the future. I'm sorry. So and also company manages its income and expenses. So you can't be shows certain more expenses than income. If it is an income, okay, you'll be earning profit. You can pay back the dividend for the shareholders and interest for the debentures. If the expenses more and or what is your income is less, in the sense it is a loss. You can't pay back to debenture holders also. You can't pay back to shareholders also. So he has to balance with the both the things. CFO works closely with the executives. Executives of the company plays a vital role in the company success, because for all the executives are in tax analyst or an financial officer. So for CFO is a direct connect with them, because they are the in also the remuneration committee and other financial committees is going to deal with them very closely. CFO is a corporate officer primarily responsible for managing financial risk of the corporation. Obviously, there will be a financial risk for the company with regards to the tax, with regards to the remuneration, with regards to the customer. If a product of the particular product is not doing well, the sales is decreasing in the sense, obviously it will be a risk for the company, because the sources has stopped, that the income is not properly is they getting for the company. So that's why it is a financial risk. So at the time CFO has to take care. Is there any improvement is required? He has to release the fund for the R&D, that is research and development team. So that research and development team, they are going to conduct a survey. Again, they have to do an improvement in a product. So again, it isn't required for a finance. So that's why it is a financial risk for the corporation. So resident director, every company would be required. See, resident director is, as we know that the foreign investors also is there. He is an invested so much of money. So but he stayed in an other countries. But the thing is, if you want to become a resident director of the corporate, he has to stay 182 days in India in the previous calendar year. As we can know, 2020 now. And in 2019, a resident director has to stay in India for 182 days out of 365 days. You can stay any days. We can stay continuously for 3 months. We can stay 15 days for each. So if they calculate entire, so it should be in 182 days. This provision will hit selecting companies who are entirely non-resident. Some of them are non-resident India, because they shifted to foreign country. So, but they want to become a resident director. They has to fulfill this criteria. So, all Indian subsidiary of foreign companies established as a company would need not have a director on board. So, if some subsidiary company which is already established in any foreign company, they need not to go for this resident director. If not, only it is an existed in India. So, if they are selecting any resident director, so at a time they have to fulfill these criteria. So let's move with an independent director. Who can be an independent director? Person other than executive officer, that the chief executive officer, or employee of a company, or any other individual having a relationship. Okay. Other than chief executive or an employee or another individual having a relationship can be an independent director. Okay. But and also they should be in the opinion of the board of directors. If not, the board of director, they are not proposing the particular person, they can't be a independent director. Okay. And who is not a promoter of the company? As we discussed, who is a promoter? Students, who is a promoter? Students, who is a promoter?
Sir, promoter is a person who brings the company into existence.
That's it. Good. So is the promoter, that promoter cannot be an independent director. Okay. And that is one of the criteria. Who neither himself or not any other of his relative. He can't be a relative of a chief executive officer and a chief financial officer. He should be an independent. Okay. So that board of director, they are going to propose that particular person. Okay. Holds as an held position of the key manager person. He can hold because then he's a part of the directors committee, so that he can hold the position of the key managerial person. These are the criteria to become an independent director. So there may be asked question in like in an examination 2 marks. What are the criteria to appoint the independent director? In the sense, he can't be a person like other than the executive, and he can't be a promoter of the company. So was not a promoter of the company, neither himself or not a relative for a chief executive or an CFO, but he can hold and held the position of the key manager person. How can he hold and key manager person? In the sense, like he can be a act as a board of committee member, and he can attend the general meetings, so he can share the opinions as a company administrator. Okay. So and also the appointment of the independent director. So every listed company shall have at least 1/3 of total number of director as an independent director. So for example, out of three, the one should be a independent director. For example, if a company earning a huge amount of sales, for example, if a company is in more than 100 crores of sales in a month, at least it's like a 2/3 of directors. You should be having a 2 out of 3 as an independent director. So various with the listing agreement specify different levels of independent directors. So that where you are listing in the company. Okay. And also some of the companies having a huge branches in the entire globe. So at a time, the directors will be increasing. 2 director is mainly required for the board of committee. That is the independent director. Required two independent director, their board immediate appointment within a given time. What is that given important time is here? For example, register of a company. Today date is 26. So if you are commencing the date, within 30 days that you have to appoint this independent director. What is the qualification? Qualification is like eligibility. As we discussed in like he can't be a promoter, and who is not a promoter, and also who is not an or like a relative of a chief executive officer. Okay. And also the remuneration. See, here he will not get any remuneration. He will pay as a part of commission from the profit, and he can purchase any some shares from the company. That's it. Or like in the form of dividend that is going to get as a part of remuneration. That is a salary part. So remuneration is like whatever he work for that is going to get a profit. That is in the form of commission or in the form of if he has purchased any shares is going to get a particular dividend for that. So what is the term of independent director? Actually, the term of independent director is 5 years. So after that 5 years, the board of directors, if they wish, they can continue with the independent director or the same person. If not, they can he can be given voluntary retirement or he can discharge from that. So another person they can propose after next to 5 years. Coming 5 years, they can propose some other independent director. So these are the main thing while appointment of the director. That is, he should be listed in the company where every listed should list 1/3 of the total company. Your company is listed in the stock exchanges, so 1/3 of the independent director should be there. That's the main thing. But the thing is, if the company is earning more profit, as I told you, the sales is more than 100 crores and the paid up capital is more than 50 crores. So at that time, 2/3 and mainly the two directors is required for the company. So and also they have to do an immediate appointment of that particular person after the 30 days of commencement of the business. Okay, these are the main things while appointing the independent director. So auditors. So what do you know about the auditor, students? Don't look into this slide. Just tell me in general what do you mean by what do you know about the auditors?
He sees the
Auditing, sir.
loss and
Financial.
he sees the loss
Balance
and
sheet.
profit of the
Preparing
company.
balance sheet.
Yeah, one by one, can you please tell me? Hari, yes, tell me, Hari.
Auditor means financially company-ಯಲ್ಲಿ work ಮಾಡೋದು sir. Balance sheet prepare ಮಾಡೋದು.
Hemant, just tell me what do you
Preparing
mean by
balance sheet. Profit and loss.
Not me, sir.
Sir?
Akash.
Akash. Okay, Akash.
Sir, is a person that sees the loss and profit of the company, sir.
Okay. Is there any who wants to become a CA in the future? CA, Chartered Accountant.
Yes, sir.
How many of you interested? Kindly please raise your hands. Okay, Akash. Okay, Akash, Nitu, Joseph, Hari, Hemant. Only 5 wants to become a CA, that is a Chartered Accountant. Okay. Okay. What you aware of this Chartered Accountant?
Business records, sir.
Okay, what is the eligibility to become a CA?
Coaching.
Just tell me. It's okay if it is wrong or right, no issues.
You should complete second PU, sir.
Okay. After second PU?
Entrance exam.
No. Okay. For what entrance exam you have to write?
You should write for entrance exam for CA, sir.
Okay.
CA institution coaching ತಗೊಂಡು.
Okay. But you have to take the coaching for the examination. Okay.
You have to pass all the 10 subjects at a time, sir.
Okay. Good.
Yearly twice, sir. We conducted.
Okay. Good. At least you have a somehow right. That is fine. Okay. Then apart from that,
You should have
after yeah,
minimum percentage.
it's not like that. See, chartered accountant, it's not like a simple that you can write and like it's like a stages. Like you have to write an IPC and and also the after your graduation you can write directly in ICWA and in CA, that you can, if it is possible, that you can directly clear your this CA chartered accountant. If you cleared also, it's not like in simple, you can't go for a company for the directly become an auditor. After your completion, that you have to work in an work with under the chartered accountant who is having a well experience. It's like a professional, like how the doctors they're going to do their masters like an MD. Okay, like that you have to do a training for that for an 1 year or 2 year duration based on that particular person. So that the person who is an auditor who is having an experience, so that you have to get a certify. That person has to certify you that you are eligible for the auditor. So at the time, it's not like a company will not directly recruit as an auditor. You have to work and you have to thorough with all the things. Is not only looking to the balance sheet. Balance sheet is not a, like a, it's not like an enough information. It will not show. It is an like a consolidated thing. If it is, then we can't look into the total consolidated thing. He has to cross verify all the balance sheet details. How it is, whatever the assets they have purchased, where they have purchased, what is the price, what is the purchase invoices, whether it is tallying with that balance sheet. I'm saying only with the fixed assets. What about the bank details, loans, cash in hand, non-fixed assets, liabilities, company, that the property value, everything, the remuneration part, the sales and the purchase invoices, the market value, share value, how much they pay the dividend, how much they paid the interest, what is the reserve fund, everything which will be, he has to be look into that, and then he can go for this cross verification of the transaction. Okay. Okay, somehow you have heard of it, or so some of them are interested to complete, you want to become a chartered accountant. For that, I'm saying all the best for you. So kindly be prepared for that. Okay. So auditor is an official who is to be careful to check the accuracy of the business records, obviously, because in auditors that we are classifying two person, that is an internal auditor and external auditors. Why companies require an internal auditor? Because he has an employee, he has only taking care of the, in order to maintain the accuracy of the business records. If they are not appointing the internal audit at a time of auditing, the external person is going to come to the company and they are cross verifying the business records. If it is not tallying with that, with regards to any of the financial aspects or the financial contents or the financial terms, regards with the this any variation in the money, so that it will be lead to so many consequences of, like it will leads to the winding of the company also. Okay, that's why we require an internal auditor who involves in taking the accuracy of the business, because we have to submit this board of directors, public, government, for everyone. So that's why. So an auditor can be either an independent auditor and unaffiliated with the company being an audited. It should be a not from an affiliated company. It should be an independent auditor. You have to choose from an any person who can be an auditor. You can appoint him as an employee of the company. Okay. And also the being audited, a captive auditor, and some are elected public officials. So this captive auditor are the public auditors. Okay, these are they are already working in a government institution. Like you can, those who are working as an is a person who is having an UPSC cleared and UPSC, and he is having an certification of an chartered accountant. He can liable for this external person from the public sector. He can go into and he can check the accuracy of the business records. Auditors can work in different entities such as an IIRS or state government. Okay. So if you have cleared an CA, if you are taking an UPSC exam, you can work in an IRS department in revenue system. Okay, and also the according to the state government. Auditor also found in private sector at accounting firms that both internal auditors are usually employees or contractor within the company they are auditing. See, auditor can be in a private sector. They are working as an accounting person. Okay, as in like an internal auditor. They will required or in recruiting the person as an employee or an contractor on the basis of contractor. So for the specific period, for example, in the next 3 months, they are going to the public auditor is going to conduct an accuracy of the business record. So at the time, they are going to get a particular person for checking the accuracy of that balance sheets and whatever the financial aspects of the business. So this is how what is an auditor. So who cannot be appointed as auditor? A body corporate, an officer and an employee of the company, a person who is a partner of the company, a person who is in debt company exceeding 1,000. See, body corporate in the board of directors or in company people are in CEO or in CFO. If he is having eligibility, we can't appoint him as an auditor of the company because he can show some wrong statement to the external auditors. As you know that nowadays auditors how they are cheating the people, how they are cheating the government. Because why auditing is done? Because auditing why the auditors are cheating the government, because in order to get the exemption from that, if you are showing the less of profit, that you need not to pay more tax for the company, so tax for the government. So that's why we can't propose a body corporate for this appointment of the particular auditors. The officer or an employee of the company. For example, if you're a chief executive officer or a CFO or an other employee managers, we can't make him as an auditor. A person who is a partner of the company. If you're a subsidiary partner of the company, okay, we can't appoint you as an auditor. In the company, if you have a debt on you, is there any debt on you? Like if you have taken any particular debt from the company, you are not eligible for an auditor. This can be who cannot be appointed as an auditor. Just for the concern of your knowledge, just I have mentioned the point here. So appointment of the first auditor. See, however, appointment of the always by the board of director within the 30 days of the registration of the company. So for the namesake, first initially the company is going to appoint the first auditor after the commencement of the business, after the registration of the business within the 30 days. Because we have to show the record that we already appointed the person. They can appoint as an employee or they can appoint as a contract. Contract in the sense it is will be in a term of 6 months or a term of 1 year or a term of 5 years. They're going to appoint on the first auditor. Appointment of the auditor other than the first. So a company shall the first annual general meeting, individual and audit firm who shall hold the office for the conclusion. Okay. Apart from the first auditor, they can like within a 30 days of the first annual meeting or in first meeting, it's not an annual meeting, it's a general meeting. So in that they can appoint and then they can take an auditor who can give a conclusion of the financial details. How we are going to do the particular records or in tracks of the particular this financial aspects of the company. Compliances before on appointment of the auditor. Is there any complaints with the regards? If, for example, as you know that the board of directors or an executive officer, they can be an opposed for appointment of the auditors from the outsider. So at the time, what he has to submit in the sense he has to submit the written consent. It's like a bonding. Okay, he has to submit for the company and also certify that he has to be certified. We can't appoint the person who is still practicing. Okay, I clearly mentioned that. For example, you cleared your chartered accountant, but still you are in like an apprenticeship, like still you are in training period. So that time it isn't still you are in practicing. We can't appoint you as a company auditor. Okay, so that is a compliance before appointment of the company. This is the auditor. Compliance after appointment of the company. Okay, so after appointment, so they are looking to you whether you are doing the performance as well or not, everything. So on that, now they are giving a notice to the ROC, the register of companies. They are going to give an ROC that we are already appointed the auditors, that the internal auditors. So meeting which is auditor is appointed. They are going to conduct, the ROC is going to conduct a meeting of the registered companies next within 15 days. So on they are going to discuss regard with this. So these are the main things. The next class, what we are going to discuss the eligibility, duties of a company auditor and rights. Okay. So next week will be the revision session for unit 1 and unit 2. For internal examination, you will be having unit 1 and unit 2. Okay. I'm going to discuss with the important question and also the question paper pattern. That's fine for you.
Yes, sir.
Sir.
Yes, sir.
So it's PPT is already available in the this LMS. Just a second, I will show you. Can you all see this slide share?
Yeah, sir.
Yeah, this is what I already uploaded in this LMS. Okay, so this is chapter 1, company. Sorry, not this one. Excuse me. Okay, this is chapter 2, and also this is chapter 1. Okay, and also the syllabus copy. These all two PPT, and this is in a PDF form. Kindly make a note of all this, whichever point which have been discussed in an PPT. Okay, make a
Sir,
separate.
it's not coming, sir.
Okay, no issues. I'm going to upload in an PDF form. Okay, and then it will. In some of the mobiles, PPT is not, the PPT points, like PPTs will, slide share will not be like it's showing some invalid or an error. So I'm going to upload this PDF form. Okay. Your voice is not clear. Yes, Joseph. Joseph, is your voice is not clear.
It's not me, sir.
Who is that?
Sweta, sir.
Yes, Shweta, tell me.
In form of PDF, sir.
Sorry. Can you drop me the message in the chat box? I'm not audible. Yes, first chapter and second chapter is for first internals. Okay. No issues in the next weeks that we are going to discuss entirely the question paper pattern and will be the important questions. Okay. So shall I end the class today?
Yes, sir.
Okay, students, thank you.
Thank you, sir.